Are home prices finally coming down here in Spokane, Washington? This is the age-old question, and we're going to dive deep into it today, so make sure you stick around. My name's Haydn Halsted, your real estate resource here in Spokane, and leave a comment down below before I give you the answer. Do you think prices are coming down here in Spokane, Washington, or are they going to continue to rise? And while you're down there, hit the like, subscribe, and notification bell so you never miss one of our weekly uploads. So I've had a lot of clients asking about home prices and where they're heading, whether they're selling or buying. They want to know, to try and predict the market. And if we had a crystal ball, I probably wouldn't be making these videos. I'd be on the beach somewhere. But I've had a few interesting conversations with people about seeing a lot of price reductions in some of their homes that they've favorited on Zillow, have been sitting there for a while, and they are, from a Zillow perspective, they think that prices have come down significantly. So let's take a look at where the numbers are. The May numbers have recently come out, and we'll see what was the activity like last month. So to answer the question right off the bat, have home prices come down in Spokane? Technically, yes. Month over month, they did come down from $435,275 in April to just $435,000 flat in May. So prices are down 0.1% month over month, but they're up 2% from last year. So even last year, where we've had about a little over a year of the 7% interest rate market, prices still increased by 2%. So even though those people were still waiting on the sidelines for prices to come down, we definitely didn't keep up with inflation or anything like that, but prices did go up by 2% year over year. So trying to predict just by median sales price history on whether prices are going to continue to go up this year, or if we have crested and are heading back down month over month into the winter, it'll really depend on next month. Like if we saw, this month that I'm filming the video, if we see any interest rate relief at all, prices are likely to go up, but I think it's unlikely. It's definitely unlikely. But if they stay low for what they've been, if we were hovering around 6.9, it's likely that activity would be decent and that we would see more people get into the market. But if we're hovering more around that 7.3 to 7.5 range, which we've seen over the last couple of weeks, then it's going to be a little bit tougher, and likely this May might be the peak high for this year. So it's very possible that we would just basically mimic what we did last year. At this point, we've kind of hit the peak. Last year, May was 426, and there was a little bit of a bump in June and July, both averaging basically the same amount at 435. So it's very likely that we have kind of hit our peak high here in Spokane for the year and are going to drop back down. And if we see interest rate relief next year, which I think is unlikely because new interest rate predictions have come out that are much less bullish than they were in 2023. Originally, many of the economists predicting interest rate drops in the mid-5 by the end of this year. Now they're predicting like 0.1% drop like month over month, and we wouldn't see 5% rates until 2026, 2027 potentially. So since prices are kind of holding steady where they're at, let's see why that is and what's affecting that. So last month, we had a huge increase in new listings hitting the market. We had over 1,200 listings hit the market, which was a 28% increase from last year and a 15% increase from the month prior. So now comparing the last few years is tough because during the pandemic, we had a very low amount of new listings coming to the market, but 1,200 comparatively to pre-pandemic is about equal. Some years, 2018, still had even higher listings in the month of May, and they started to drop down. So as long as we see new listings hitting the market peak here in May and drop down in June, we shouldn't have anything really to fear in regards to an oversupply of new listings hitting the market for the year. But this new amount of listings has definitely caused the market to slow a little bit. So we're going to touch base on if it's a buyer's, a seller's, or a balanced market here in just a minute. But let's touch base on the active inventory on the market. So we had 1,200 new listings hit the market, and now 1,400 total listings are sitting there. Some have been on the market for a year, some have been on the market for a few days, but 1,400 active listings in the month of May. Now that's a 44% increase from last year, so almost double of what the active inventory is. So we saw a 30% increase on new listings, but we've also seen a reduction in the number of buyers this year. So that is resulting in a higher percentage increase of the amount of inventory staying on the market versus what's coming to the market. And this was a relatively rapid increase from last month. May was a big month for inventory. April to May, that was a 30% increase of new listings hitting the market, or basically an additional 350 homeowners that put their house on the market than the month prior. So I've broken this out by price distribution here because it's kind of interesting to see what's happening at each level of the market. And you can kind of see based on what price point you're going to look at how the market's going to be for you. So the most amount of inventory is where our average price point is at. 283 homes active on the market between 4 and 500,000. Then it's relatively the same between 300,000 to a million, the number of homes hitting the market. And then obviously a very small amount of homes under 200K and a very small amount of homes, a million and above 1.5. I don't know why they switched these two right here. But so now keep this in mind. We kind of have a little bit of a peak here from 4 to 500,000. It's relatively flat below, and then it kind of peaks off pretty rapidly down to the lower price point and the upper price point. So if we check out the number of closed homes in the month of May, so we had 566 homes closed, which is actually down. So less buyers in the market and less homes closing. And you can see how concentrated those closings were. They were really between 3 and 500,000, the vast majority of those deals. We had 170 closed on between 3 and 400. And if you're looking at new listings, 3 and 400, 239. So like the gap between those two numbers is only like 18 homes difference. That's very, very small. But looking again at the closed sales, a good chunk between 4 and 500. And then there's a big drop off here between 500 and beyond, really, for the number of homes that were actually on the market in the previous graph. So that is going to very much affect our month's supply of inventory. And that's what I'm really excited to dig into here, because this is really showing how this is affecting the market. And so we've talked about month's supply of inventory before. It's the absorption rate. It's the amount of active homes divided by the number of closed. And it shows the number of months it would take to sell all the inventory in our market. And so I have taken this and gone a little bit deeper, and I've subdivided it into different areas of Spokane. Split it up into Spokane, Spokane Valley, Liberty Lake, Green Acres, and Mead. So just kind of the 5 more popular areas, locations of Spokane. Obviously Spokane, Spokane Valley are the largest of those. So overall in our market, we have 2.3 months supply of inventory. That's an increase from last year of 61%. So we've added basically a whole month onto our month's supply of inventory. Remember, anything under 3 months is still considered a seller's market where you're likely to run into multiple offers, but we're running into that time where sellers, you should only really expect 1, maybe 2 offers on your house, but to still sell relatively quickly because the average days on market is 9 days. Once you start to enter into that 4 to 6 month range, you're in more of a balanced market where buyers and sellers, some houses are going to sell fast, some are going to take a really long time. And then once you get above 6 months, that's where buyers have all the power. They're going to negotiate super hard. They can take their time. They have tons of options available to them. Now, the awesome thing is that all of those markets exist inside of Spokane right now. And so it just depends on which location you're looking at and which price point you're looking at. So the orange here represents Spokane Valley. So the very interesting thing is that Spokane Valley has pretty low inventory under 500,000. It's pretty hard to find a home, especially under 400,000. And so the month's supply of inventory is about 2.5 or less in the Spokane Valley below 500,000. But there is a rapid increase of month supply of inventory above 500,000. When you're 5 to 600,000, it's 5.4 months of inventory. We are nearly approaching a buyer's market. Between $600,000 and $750,000, we're at 11.5 months of inventory. It would take nearly a full year to sell all of the homes in the Spokane Valley between 600,000 and 750,000. So what does this mean? Sellers, you really have to adjust your expectations in the Spokane Valley between $600,000 and $750,000 if you're looking to sell your home. This is a major change from the last 2 years where we were expecting your home to sell within 2 weeks. Now we're talking 12 months. So the agent you're working with is going to need to have a long-term plan to get your home sold, or you need somebody that's going to be very honest with you about the price that your house is worth in order to get it sold in the time frame that you need it sold in. Buyers, there is a lot of inventory available in the Spokane Valley between 600 and 750,000 available to you, and you have the power. You go submit some really strong offers between 600 and 750,000 in the Spokane Valley and get a good deal on a house because you have the power in that neighborhood. 11 and a half months of inventory is wild. Now, even to 750 to $1 million in the Spokane Valley, you're at 6.3 months of inventory, still technically a buyer's market. Let's look at Green Acres, heading a little bit towards Liberty Lake here, 500 to 600, 5 months of inventory. Above 750, you're at 7 months of inventory. Again, you're in a buyer's market. In the city of Spokane, this blue line, the city of Spokane is generally still a seller's market. Once you get above 750, it starts to cross over into a balanced buyer's market. I would be curious what's going on here because above 1.5 million is 24 months of inventory. So there are some luxury properties that have been on the market for quite a long time and are not selling. One of the most desirable areas in Spokane, Liberty Lake, is still a seller's market in the majority of the price ranges. Once you get above 750, you're at 5.5 months, so it's pretty balanced to a buyer's market, but anything below 750 is still moving quickly. And then what's interesting about Mead is that actually the median price point, 5 to 600,000, there's so much inventory in that price range that you're actually looking at 9 months of inventory between 5 and 600,000. So if you're looking in that price range as a buyer in the Mead School District, write some competitive offers. If you're listing your home, you need to change your expectations, have an agent that has an incredible marketing plan to get your home to stick out amongst all the other competition in your area. And what's really interesting is how much that drops off. 5 to 600, tons of inventory. There's nothing, the appreciation is probably very little in that neighborhood right now at that price point. And then it just drops off significantly. You get above 600, it's a competitive seller's market. You get below 500, it's a competitive seller's market. It's very interesting. So use this breakout to your advantage. This is the information that you need when looking at buying a home here in Spokane, Washington, because you can see how different certain pockets of neighborhoods are. You want to look at the month supply of inventory for the neighborhood that you're interested in. So make sure you're asking your realtor to show you that. Hopefully they understand to show you that. If you need an awesome realtor that understands this stuff, I'd love to help you out with that. Make sure to just use the information down below. Reach out to me. I'd love to have a meeting with you and see how I can help out. But the last thing I want to touch on is the percent of distressed listings. I had an open house this past weekend and a lady was asking me if the house was for sale via short sale. And I was just curious and I asked her, like, why are you specifically looking for a short sale? And she wanted a house, she wanted to get the most value for her money. And I informed her that the amount of distressed properties in Spokane is basically still non-existent. Now, with the numbers I just showed you, it's likely to happen a little bit more, but what I am seeing most is that any of these kind of distressed properties are generally selling off market, off the MLS to cash buyers or a wholesaler. Only 0.2% of our MLS is a distressed foreclosed property of some sort. I mean, that's basically nothing at this point. So if you are looking for a foreclosed house, a short sale house, something like that, you need to connect with wholesalers, people that do off-market deals. I'd be happy to connect you with somebody, but you have to expect that you're going to have to pay for that property in cash or with a hard money loan. You're not going to be able to get a traditional loan on those properties. So it is an interesting time in our market. We're seeing that influx of inventory that people have kind of talked about, but only in very specific parts of the market. So because some of parts of our market are very much a buyer's market and some parts are still very much a seller's market, it's keeping Spokane relatively balanced and more towards the seller's market at this point. But this is some very useful information in regards to negotiating your offer. So if you found this video helpful, make sure to like, subscribe, and hit the bell down below so you never miss one of our weekly episodes. And if you'd like me to be your real estate resource here in the Spokane, Washington area, whether you're relocating in, relocating out, or just relocating neighborhoods, I would love to help you and be your guide. Use the links down below to reach out, and I would be happy to help. Thanks so much for watching, and I'll see you in the next video.